Craig, one of the things that we've seen this year actually is that the European equity indices have underperformed compared to their US counterparts. And we are seeing them taking money out of the region, but we have a slew of IPOs lined up. This morning itself, we had Knorr-Bremse in Germany, which is valued at up to 14 billion euros. We had Cepsa, of course, Aston Martin's on the road. What's going on? Why do you think there's investor appetite for these deals?
Well, Ruth, I think the IPO market is open, but it is selective. It is not indiscriminate. Investors have cash, and they're looking to put it to work. What investors are looking for are stories that offer sustainable growth through the cycle, resilient margins, and strong cash generation. And here in Europe, there are opportunities. You're right, Europe has underperformed. And that's one of the reasons why investors are now looking to come back into the market.
And do you anticipate overall general positive sentiment around these IPOs, or this is just very specific cases? Will we see a sort of flood of new IPOs coming to market, or is this just very specific?
That's a tough question to answer. What I would say, it's a bit like the story of the three pigs. Investors want to invest in the house made of bricks. They don't want to invest in the house made of sticks. They don't want to invest in the house made of straw. They want to be in the house made of bricks, because when the big bad wolf comes, whether it's trade tensions, economic slowdown, or currency volatility, they want to know that they are safe.
Okay, we avoid the sticks and the straw.
But speaking of houses made of sticks, it's 10 years since the Lehman crisis, and it seems like just last year, European banks finished their whole wave of recapitalizations, which have been going on for pretty much the last decade. What do you see next? Is it really done? And is the next move maybe financial consolidation? What's going on there?
Well, banks spent a long time strengthening their balance sheets, and we were very busy working with banks over an extended period of time to try to raise capital for them. I think now banks have moved beyond capital strengthening, and now they're trying to rethink their strategy and grow earnings in a sustainable and appropriate way. And that's going to be the challenge. We still see banks trying to rationalize their operations, maybe disposing of non-core units, and really just trying to optimize their capital.
So consolidation is part of the story, but not the whole thing. I mean, we've talked about consolidation so many times in Germany and Italy and elsewhere.
Consolidation is one theme, but of course, on a cross-border basis, it's inevitably complicated. It's also complicated because banks are such a heavily regulated sector. So it has to be more than just consolidation.
And cross-border IPOs are, of course, a big theme that we've seen. We've been talking a lot about maybe the largest IPO ever with SoftBank Mobile and others like that. What are you seeing among on the competition among banks to get these roles, and how is that affecting their risk appetite and what they'll do to maybe get on the large IPOs?
Look, since I've been in this business over 2 decades, it has always been ferociously competitive. No bank, for example, no bank has more than 10% market share in any given year in European equity underwriting. It is really competitive. It is more competitive than even financial journalism. But what I would say is that my experience is that clients choose the bank they want based on their capabilities, and then they discuss the terms and conditions. It is not a race to the bottom. It is really a competition based on what you can deliver for the client.
And if for those banks who are looking for that work, what is the role of the activist investor here? Are we seeing activist investors driving spin-offs, that is creating more of that work? Do we expect to see that trend continue, activist investors driving up more activity, corporate activity?
Well, what I'd say is we are seeing European companies trying to rethink the way their capital is allocated, redeploy capital in a much more optimal way, whether they're under pressure from activists or not. And as a result, there are opportunities here for spin-offs, demergers, disposals of non-core units. And that is actually a trend that is picking up in Europe. It started in the U.S., of course, but Europe is quickly catching up.
And private equity firms doing IPOs, we've heard of EQT maybe looking at that. Do you think that would encourage more European private equity firms to follow in the footsteps of their U.S. counterparts?
Well, asset managers generally, a buyout firm is an asset manager, and asset managers can be attractive IPO candidates. The key is, of course, understanding how sustainable the earnings are, how volatile they can be, and how strong the franchise is. I do think that asset management firms with differentiated franchises could be very attractive for investors.
In terms of IPOs and where they list, where are we going to see these big IPOs listing in future? The LSE, of course, continues to bang the drum for London, despite all the clouds around Brexit. Asian companies, are they still, fascinated by London, or they're more fascinated with New York?
Well, I think we have to draw a distinction. On the one hand, we have the Shanghai connection, so some Chinese companies are looking to list GDRs, global depository receipts, in London. We'll see how that develops, but their principal listing will remain in China or in Hong Kong. In addition, you have seen Chinese companies, especially technology companies, listing in the United States, and that trend will continue. We've seen several successful IPOs in that area. I think most companies list in their home market. And given the way that capital operates today, you're better off listing your home market, because in most cases, investors can trade on virtually any stock exchange.
OK, Craig, thank you very much. Thanks to both of you for joining us. Ruth David, Bloomberg's senior European deals reporter, and Craig Coben, vice chairman of global capital markets at Bank of America Merrill Lynch.